The share market crashes. Let's have a look. Good morning everyone, Florian Heise here and welcome to another episode of HeiseSays. I have my morning stein of coffee and I thought we'd have a look at a few articles from the news.com regarding the crash in the ASX. Stock exchange has taken a bloodbath, guys. It really has. So before we go through this, we'll just jump over here to this chart and you can see the last 2 days. Look at that dive, guys. Look at that. That is significant. It's a big hit. And while I've got you, what are your favorite websites for trading on the stock exchange or doing analysis, looking at data? Let me know in the comments. I'm doing, using Trading Economics all the time. I like TradingView. Are there any other suggestions you have? I'd like to see some more options. I know TradingView is pretty good. I'm just starting to learn a bit more about TA to see how it can complement fundamental analysis. So, I want to look at more options. It'll definitely be interesting with the activity in the market at the moment. So, virus fears blame for the $60 billion ASX bloodbath. The local share market bloodbath has continued on opening this morning as the spread of the deadly coronavirus causes mass panic. And we've had a look at how this is having issues with regards just to shipping on an international level. And that's going to have implications for countries just like Australia. And I'll bring up the OEC website for those of you that haven't seen it, or maybe you're a new viewer. These are all what we're exporting, very primitive things. These are all we're importing, much more sophisticated things. These are the destinations for our exports. Big chunk to China. Then a far second is Japan. And the sources of most of our imports. China's the biggest, over double the United States. So, the fact that there could be supply delays in China could have a lot of implications on our economy here in Australia. I think we're quite vulnerable, to be honest. So, maybe that's why the government is allowing 100,000 students to come to Australia. Perhaps political reasons. Maybe I'm just being cynical, or we don't have the full picture. Hopefully, if they're people coming from another country who, would just happen to go on holiday overseas, maybe to Bali, you wouldn't want to be banned just because you're a Chinese citizen coming to Australia, would you? If you're at low risk. Surely they could manage it like that. That's what I'm hoping. But, yeah, we know what the government's like. So the Australian ASX has plunged over 2.6% at opening this morning following Monday's bloodbath. Shortly after midday, and this is from the 25th, this is from Tuesday. Shortly after midday, the S&P ASX 200 was down 1.3% after earlier falling 2.6% to a 7-week low of 6,800. So I'm just checking over here, 6,708 at the moment. The biggest losers so far have been those exposed to travel and tourism, such as Webjet, which is down 7%, Flight Centre, which is down 2.4%. The broader All Ordinaries Index was down 1,661.1 points of 2.35% following the Dow Jones fall on Monday. The All Ordinaries Index had around 51 billion wiped off its value yesterday. So there we go. And we know right now it's even worse. So Monday trading. After close of trading on Monday, 50 billion was wiped off from the Australian stocks. But it was what happened on Wall Street overnight that impacted markets this morning. The Dow Jones Industrial Average sank more than 1,000 points, and global stock markets tanked to the tune of 1.5 trillion as the deadly coronavirus decimates the global economy. The Dow Jones plunge was the worst in 2 years and wiped out its gains so far in 2020. Now, I think this is a good lesson to take from this, that the value we assign to these assets, to these shares, a lot of it is propped up on psychology and emotion. Once fear sets in, once people get more concerned, once people want to reduce their loss, then it can start building upon itself. We can definitely get a falling market. Particularly with all these unicorns that we've been seeing around the place, these businesses that make no money. I'm looking at things that, okay, I'd like to invest a little bit here, invest a little bit here. Even with my crypto trading, I'm finding things where I can invest in that actually pay me a return. Maybe that's just my my psychology now. I'm becoming older and more boring. You know, I'm investing in crypto. They pay me a dividend pretty much. But you've got these huge companies. It's just all hopes and dreams and unicorn fairy dust. And now maybe they're starting to lose their value. So what's going to happen? Are they going to start pumping more and more QE, printing more and more money just to prop this up? Maybe for the election in the States? The Dow lost 1,031 points, or 3.6%, to 27,960. The S&P 500 fell 111, or 3.4%, to 3,225. The Nasdaq fell 355, or 3.7%, to 9,221. Until today, the $60 billion wipe out of the local stock exchange was the ASX worst day in 6 months. Well, it'll be interesting. I'm recording this, at 7:45. It'll be interesting to see how today opens in the market here in Australia. It won't be long. The benchmark S&P 200 index closed Monday down 160.7 points, or 2.25%, to 6,978. And I'm sure looking at the 6,708, people wouldn't mind those 200 points. It's a wipeout today, wasn't it? Said Australian stock reporter, senior analyst Ben LeBron. It's a real bloodbath, to be honest. I'm looking at my screen, just down arrows across the board. This is quite the stampede for the exits today. China's President Xi Jinping comments on coronavirus were responsible for just over 48 billion to be wiped off the value of shares. So think about that. Just a concern with the coronavirus can wipe out that much wealth in an instant. Or no, in a day. In a day. That's still a pretty big issue. Earlier yesterday, the president of China said the coronavirus situation was at a critical stage and called it a big test for the Communist Party. The comments set off a chain reaction as the ASX declined and the dollar dropped to US 65.97 cents. So I will just I'll bring up the Aussie dollar right now, and it's at 65.47 cents. So it's dropped another 50 pips since this article was written 2 days ago. So look at that. Who's shorting the Aussie dollar to the US, guys? Who's shorting it? So, lowest point since the GFC since 2009. Now the concern with that is, with our cash rate so low, with the construction sector, as I reported on yesterday, continue its sixth quarter of reduced building work done, with job adverts that were coming out, they're predicted to be down 6%. You know, the ANZ job ads that I've been watching, they're predicted to drop 6%. What do you think the RBA is going to do with the next rate cut? Can they lift this? No, that's building approvals. Can they lift it? What happens if they lift it? How are all the people that are in arrears going to cope? So I know people are going, oh no, but it's all going good. It's all going good. The market's going great. You're talking rubbish. But these things are slower moving than people anticipate. It'll build upon itself. It'll take a few months for people to start to really feel the issues of interest rates increasing. Think about it. Well, back to here. And this is a big test for the Communist Party. Maybe it'll be the end of the Communist Party. What do you think? Do you think the Chinese civilization could adapt to a liberal democracy? Well, Taiwan seems to have done it, hasn't it? You know, maybe they'll win eventually. The war ain't over, is it, over there, technically? So it is now back at 66 cents. No, it's not. So the coronavirus spreading. Let's have a look here. The stock market reaction follows rising cases of coronavirus worldwide as the confirmed number of those infected rose to 78,000. Only 2,469 people have died from the disease, while 23,300 people have recovered. The past few weeks has demonstrated just how quickly a new virus can spread around the world and cause widespread fear and disruption, said the head of the World Health Organization. So even if the virus isn't as deadly as it is, it's going to have economic impacts. We know that. And hopefully businesses will learn that depending on a single source supplier or multiple source suppliers from a single destination may be too much of a risk for their supply chain. I mean, these are all things that they should be aware of. But commercial competition maybe is a hard lesson to master. So by the numbers, I mean, there you go. Look at Iran. And I think it's gotten worse here. So what we'll do is we'll jump to the next day. And this is from yesterday, this article. The ASX stocks to fall for a third day as coronavirus spreads, and this is 26th. Australian stocks have suffered through the second major loss, although they rebounded from their lows on news the US researchers had developed an experimental coronavirus vaccine. Okay, now, as someone who has watched, the zombie movies and played computer games, an experimental vaccine to deal with a virus, isn't that like the plot of every one of these, these post-apocalyptic computer games or movies? They've developed a vaccine to cure this virus, and then boom, everyone's zombies. Let me know. I'm probably overreacting. I'm sure I am. So the benchmark S&P ASX 200 finished Tuesday down 111.7 points, or 1.6%, while the All Ordinaries was down the same. You can take the heart that it could have been a lot uglier, said Pepperstone head of research, Chris Weston. Well, here we have. What we'll do is we'll jump over here to trading economics, and we will just have a look at the stocks, and here at the ASX 200, which is down. And we'll just go through this bit here at the top because I think it's quite important. So the benchmark S&P ASX 200 plummeted 159 points, or 2.3%. Now, on the economic data front, total construction work done in Australia declined 3% quarter on quarter, as I spoke about yesterday. The sixth straight quarter of falls, and worse than market consensus of a 1% drop. And that's the biggest thing, guys. People make money doing day trades, where they're analyzing the earnings reports and comparing it from expectations. So if the market expects an earnings report to be at a certain level and it's different, they'll put a trade on that. Let me know in the comments if you're able to make a profit doing that. I played with it, but I didn't play with enough money to do it, and it's very emotional. So let me know, guys. The decline in the index followed a back-to-back plunge in Wall Street, all sectors declining. Here we go. Technology down 3.1%, healthcare down 3.3%, industrials down 2.7%, energy 2.5%, telecommunications 2.2%, basic materials 2%, finances 2%, consumer discretionary 2%, and consumer non-cyclicals 2%. And the broader All Ordinaries shed 2.4%. So this is across the whole sector. So what do you think, guys? What do you think today will, make your predictions. Do you think this will continue for a third day in the market in Australia? What positive news could turn it around? Let me know your thoughts and opinions in the comments below. Thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and you want to help us out, there are a few ways you can. You can share the content, help the channel grow, and get the videos out there on social media. You can support us on Patreon for a small monthly donation. You can do the same by joining the channel here on YouTube. There you get the bonus of access to little badges and emojis. We also have affiliate links for Independent Reserve and Kucoin for all the crypto traders out there, and Amazon and eBay for your consumer purchases. We receive a small commission of the fee you pay, or an advertiser's fee from Amazon or eBay, so it doesn't really cost you a cent. We also have pocket squares handmade by Rachel in this very house that you can get from the HeiseSays blog, and finally PayPal if you want to contribute that way. Thanks to everyone who's helping the channel. It's growing quite well. I appreciate it. Have a great day, and keep your eyes on the markets. Take care.